and welcome. You're watching the Business Today show, and a very good evening to all our viewers. I'm Chaiti Narula, bringing you all the top stories this evening. Let's begin with all the top news from the world of business. More good news for the consumer. Rise in wholesale prices at 21-month low in November. Food prices rise at just a little over 2%. Question is, will this slow the pace of unprecedented interest rate hikes? Stock indices end in the green after a listless trading session. All eyes are on the quantum of the interest rate hike by the US Fed tonight. Hopes that the Federal Reserve will slow the pace of rate hikes after moderation in inflation figures. Paytm share buyback fails to enthuse the Lal Street. Stock falls as much as 2% in trade as analysts view the loss-making company's buyback at 50% premium with skepticism. India Today Group, in an exclusive conversation with Civil Aviation Minister Jyotiraditya Scindia, assures the strictest steps are being taken to manage the chaos at Delhi Airport. Says measures are being taken at Mumbai and Bengaluru to prevent overcrowding. Huge relief coming in there for consumers, with the wholesale inflation falling to a 21-month low. 2 days after consumer inflation number hit an 11-month low, WPI fell to 5.85% in November. The inflation index was at 8.39% just a month ago and 14.87% a year ago. The sharp decline in wholesale prices comes due to a big fall in the food inflation, which fell to a 22-month low of 2.17%. The manufacturer goods inflation also fell to 3.59% in November. This relief comes even as global inflation rates cool down in November. Inflation in the US fell to 7.1% last month, down from a high of 9.1% in June. The UK, which has seen price rise at 40-year highs, saw inflation fall to 10.7% from a record high in October. The European Union has also seen prices cool off in November, raising hopes that the era of unprecedented interest rate rise may just be coming to an end.
In November of 2013 was at 19.93%, and the earlier month in October it was 18.19%. And when record was like this, to ask us who have worked to bring the inflation down from 6.77 in October to 5.88 in November, here the same time, 19.93 in November, October 18.19 in 2013. Now if they are asking us to bring it down further, we'll bring it down further for common people's sake. But can they ask us? 18 and 19% inflation.
So what impact will the lower inflation have on rate rise as well as in the stock market? Here's an excerpt from a conversation Business Today TV's managing editor Siddharth Sarabi had with Sujan Hajra, who is the chief economist in ED, Anand Rathi Securities.
The trajectory is downwards. If the trajectory is downwards, what are your own month-on-month readings, at least till March, if not beyond that?
My sense is that by March, our CPI inflation will come down below 4%, and the fall can be significantly more for WPI, because the base for WPI is extremely elevated, and we have seen with the input prices coming down, WPI can soften faster. In fact, for the current month also, WPI is marginally lower than CPI. So WPI can fall significantly. So basically, we are telling that it will be even lower than the midpoint of RBI's target, which is 4% by March.
If I heard you right, are you saying that WPI will be lower than 4%, which is the benchmark that you just mentioned for CPI?
My sense is that WPI will go into negative inflation, which is called deflation, during a significant part of 2023.
Okay, that's a very good point that you make, and let's take that forward in terms of its impact. If wholesale prices are to be in deflationary territory, and consumer prices, because of the margins that get added on, remain below the 4% level, which is the RBI's threshold target really. What does it mean for different key aspects that really get impacted, starting with interest rates? What do you feel is likely to happen to interest rates and the cost of money in India?
So far as the policy rate is concerned, RBI is either completely done with rate hike, or our sense is that at most another 25 bips rate hike is possible, though that's also not given. And if you look at the transmission of the policy rates in the debt market, particularly on the shorter end of the debt market, the money market and the short-term government securities, the transmission has been very significant. But having said that, if you look at in the credit market, that is in terms of deposit rate and lending rate, the transmission has not been particularly significant. So my sense is that the debt market, the highest rates in the debt market is already behind us. But in the credit market for lending and deposits, some level of increase can continue, especially because currently, if you look at the deposit growth rates are significantly lower than the credit growth rate. So the banks are in need for money. So if they are needing money, they might have to increase the deposit rates. And if they increase the deposit rate, they might increase the lending rate as well. So my sense is that so far as the bond market is concerned, the worst is behind us. For the credit market, some more modest increase in interest rate is possible.
Let me conclude this conversation by asking you, as an economist, what do you expect to happen when it comes to India's stock markets? You know, we seem to be bucking trends repeatedly. One of the key milestones that we will see is the union budget. But broadly speaking, do you have a view on the markets as well?
See, ultimately, if you look at in the medium to long term, the equity market moves on only three things. First is fundamental, both macro fundamental and corporate fundamental. Second is liquidity, how much money is getting into the equity market, both from domestic sources and foreign sources. And lastly, valuation. So far as the macro fundamentals are concerned, India presents one of the best macro fundamentals globally. So far as the corporate fundamentals are concerned, corporates are actually doing better than the overall economy. So far as the domestic liquidity flow towards the equity market is concerned, we haven't seen a better period in the last 20 years, 30 years than what's happening, with the monthly SIP amount crossing 13,000 crore, that is about 20 billion a month annualized basis. So domestic liquidity is extremely buoyant. So far as the FII flows are concerned, whenever there has been an outflow from India, as happened in 2008, 2011 and 2018, the next couple of years on an average we get $20 billion of inflow. So if the foreign flows also pick up, that also can be a big factor. Lastly, if you look at the price to earnings ratio of Nifty 50, and I'm not talking about a forward-looking basis, I'm just looking at the trailing 12 months. Today, Nifty is trading at 22 trailing PE. The average between 2015 to 2021 has been in excess of 26. So while Nifty may not be very cheap, it's not very expensive either. So looking at the fundamental liquidity as well as valuation, I have a positive view about the Indian equity market. My sense is that 11 to 13% return over the next 12 months is something which is very feasible.
The government has extended the deadline to submit preliminary bids for the IDBI bank privatization till 7th of January. The government and LIC together are looking to sell 60.72% of IDBI bank and had invited bids from potential buyers in October. The last date for submitting an expression of interest was December 16. For more on the reasons, we're being joined by my colleague Karishma Asudani. Karishma, why has the deadline been extended? That's the first question. And are there no bidders for IDBI Bank?
Well, right, the centre has extended the deadline to submit preliminary bids for the IDBI bank privatization to 7 January. It was December 16th earlier. The government and LIC together are looking to sell close to 60.72% of its share in IDBI bank and had invited bids from the potential buyers in October. Now, the last date, as I mentioned to you, was earlier December 16th. Now, the centre is looking to divest a 30.48% stake, and LIC will offload close to 30% stake also. After the stake sale, LIC's stake jointly will come down to 34% from currently, which is close to 94.72%. Now, DIPAM is going to do this in a two-stage process. Earlier, in fact, DIPAM had also said that potential buyers should have a minimum net worth of rupees 22,500 crore and must report a net profit in 3 out of the last 5 years to qualify its bid for the bank. In addition, a maximum of 4 members would be permitted in a consortium. Also, as per DIPAM, the successful bidder would be required to mandatorily lock in at least 40% of the equity capital for 5 years from its date of acquisition. Now, while of course the proceeds from IDBI disinvestment will not be factored in the current estimates of disinvestment, it's certain that government is looking to complete this in the coming fiscal.
The markets mirrored US rally after inflation figures raised hopes of a breather from the steep rate hikes from the Fed. It was green across the board today, barring the FMCG pack. We'll bring that on your screens. The Nifty ended with gains of 50 points. The Sensex closed higher with gains of 145 points. The broader markets were the outperformers of the day, and sectorally, the day really belonged to the realty, IT and the metal stocks as well. Amongst the gainers, top 2 spots were taken by metal names Hindalco and JSW Steel, followed by nearing 2% gains coming in from ONGC, UPL and Eicher Motors. On the losing front, it was FMCG major Nestle that closed with losses of over 1.5%, followed by ICICI Bank, Bharti Airtel, Asian Paints and Hindustan Unilever Limited or HUL. All right, let's take a look now at all the corporate news. Mahindra & Mahindra will invest 10,000 crore rupees to set up an electric vehicle manufacturing plant in Pune. The company said it will manufacture its Born EV range. That includes the electric version of the XUV 700 at the Pune plant. A day after SBI raised interest rates on its FDs, HDFC Bank has followed suit by hiking deposit rates up to 7%. The country's largest private bank is offering rates of up to 7.75% for senior citizens. From the primary markets, India's largest winemaker and seller, Sula Vineyards public issue has subscribed 2.33 times on the final day, while the QIB subscription stood at 4.13 times. Non-institutional investment was 1.51 times and the retail portion was subscribed 1.65 times. The 48th GST Council meeting scheduled on 17th of December is unlikely to take any major rate cut decisions. Senior government sources have told Business Today TV that the GST Fitment panel has recommended only 2 major rate modifications which do not include reduction in the tax on gold, silver and diamonds. We're now being joined by BTTV special correspondent Karishma Sudani, who has exclusive information on what to expect from the crucial GST Council meeting. Karishma, over to you.
Well, the 40th GST Council meeting scheduled to take place on December 17 is unlikely to take major decisions surrounding rate changes. In fact, the Fitment Committee has recommended only 2 major rate modifications that is to be discussed in the upcoming GST Council meeting. Now, sources tell us that the Fitment Committee has recommended not to reduce the rate of tax on gold and silver from 3% to a lower rate or of diamonds from 1.5 to a lower rate. The committee has also refused to reduce the rate on tax of pump sets, pencil sharpeners from 18 to 12%. As per Fitment Committee, there is only one major rate recommendation that will be taken up, which is on the byproducts of milling dals and pulses like kanda, chura and chika, which is likely to be 0. Currently, it's a 5% 5% tax that is charged on them under GST. Now, the Fitment Committee has recommended not to reduce the rate of tax on goods like printing paper by newspaper agencies and printing paper for books from 5 and 12% respectively. However, the committee has recommended that SUVs be subjected to a 22% compensation cess if there is certain vehicle performance conditions met. Now, the committee has decided to defer its decision on GST on cryptocurrency because they are awaiting report from state finance ministers of Haryana and Karnataka to give a detailed view of the tax treatment of cryptocurrency and virtual digital assets. Now, the 40th GST Council is ready to discuss key important reports that will be submitted as per sources report of Committee on Levy of Penal Interest on Delayed Remittances by GST of banks by government accounts of RBI, and of course formation of GST Tribunal report that is to be submitted will be taken up. Now, what is of course not going to be taken up is the group of ministers report on online gaming, which has been quite the topic for last few months. As per sources to Business Today Television, which we also reported few weeks back, is that the final report has not been submitted and prepared and will not be taken up, but there is uniformity among all the members of the group of ministers, the ministerial panel, that there has to be a 28% GST tax. However, what they're not sure is about the valuation mechanism.
All right. Thank you so much, Karishma, for that input right there. Now, moving on to the other big story we're tracking here today. Even as Delhi Airport grapples with a tsunami of passengers, it is the security personnel stationed at the airport who are now facing the brunt. According to reports, all leaves of the CISF personnel have been cancelled to cope up with the winter rush. This is coming in even as the money owed to the paramilitary force has ballooned to more than 5,000 crore rupees. Take a look.
No one had anticipated that you would be getting 4.28 lakh passengers traveling per day. No one had anticipated that we would be breaking pre-COVID levels. Having said that, this is truly and clearly the responsibility of the airport manager.
The Civil Aviation Minister, in an exclusive conversation with India Today Group, making it clear that it was contingent on the airport to manage the tsunami of crowds. However, even as Indians crowd the airport in a rush for winter holidays and to celebrate with their loved ones, the sentries at the airport gates find their holiday plans shattered. In what seems to be a knee-jerk decision, all leaves and even the weekly offs of these security personnel have been cancelled. In its efforts to raise the passenger handling capacity, the Home Ministry has also deployed additional CISF personnel to man the 2 new passenger gates and the 3 new baggage checking counters.
Duty of CISF goes far and beyond airports. Airports, if at all, is one segment of the duties that CISF performs for our nation. So I cannot talk about the leave ratios for CISF as an institution across the nation. All that I can say to you is that there is no shortage of CISF personnel in terms of manning our airports across our country.
Interestingly, one of the biggest causes of delay, according to CISF officials, is the fact that passengers are openly flouting the one cabin baggage rule and carrying several bags, increasing the load on the baggage check counters. Meanwhile, a shocking report by the Parliamentary Standing Committee on Transport, Tourism and Culture tabled in Parliament shows that the CISF is owed more than 5,000 crore rupees for deployment at airports. The panel has recommended that the Civil Aviation Ministry work out a payment plan with states and other organizations.
Now, the issue of the economic cost of the 5,000 crores due, that's a money matter. But that money matter is not going to come in the way of CISF personnel manning each and every one of our locations at our airports.
This despite the fact that for each domestic flight out of Delhi, 236 rupees is collected as aviation security fees for services rendered by CISF. Other than this, passengers are also charged a common user terminal equipment CUTE fee, a regional connectivity scheme or RCS fee, a passenger service fee and a user development fee. This is topped by 5% GST on the basic fare. A report submitted by the Home Ministry in Lok Sabha earlier this year in April claimed that 2,430 crore rupees had been collected as airport fees from April 2020 to December 2021. Of this, 1,886 crore rupees had been disbursed. The report also said that the CISF was currently deployed at 65 airports with a sanctioned strength of 30,996. CISF is meanwhile raising its strength at Delhi Airport to tackle the big rush expected to hit the gates on this weekend. Skeptics feel that this may not help matters till the other issues hobbling airport operations are not addressed. Bureau Report, Business Today Television.
On Tuesday, we told you about some of the safest cars on Indian roads. We now turn our attention overseas, where latest reports show that leading global small SUVs have failed crash tests by the Insurance Institute for Highway Safety, a US-based non-profit. Here is more on the story.
The Insurance Institute of Highway Safety, a US-based non-profit organization funded by auto insurance companies, is now updating its long-running crash test. The motive to update norms comes as we see an increasing gap in the protection provided for front and rear occupants in cars. Only 2 out of 15 small SUVs tested for safety earned a good rating. The Toyota RAV4 was rated acceptable, while Audi's Q3, the Nissan Rogue and the Subaru Forester were marginal. Among other cars tested, the Buick Encore, Chevrolet Equinox, Honda CR-V, Honda HR-V, Hyundai Tucson, Jeep Compass, Jeep Renegade, Mazda CX-5 and Mitsubishi Eclipse Cross all entered the bottom band with a poor rating. IIHS President David Harkey says that people are now nearly 50% less likely to be killed in a frontal car crash than they were 25 years ago. The updated test now poses a challenge to manufacturers to bring in similar safety standards for backseat occupants. All 15 vehicles passed the original evaluation. However, as per the modified test, the same cars do not provide ample protection to the rear passengers' head or neck, the most vulnerable areas of the body.
This is the first U.S. frontal crash test to make use of a rear occupant dummy. We tested 15 small SUVs in this first round of testing. For years, we have focused on the driver and the front seat passenger when it comes to preventing injury and likelihood of being killed in a crash. Front seat occupants are now benefiting from technologies such as airbags and advanced seatbelt systems. The same level of technology often does not exist in the rear seat to protect those occupants.
A recent IIHS study of real-world crashes showed that backseat passengers were injured more severely than front-seat occupants. The only 2 well-rated SUVs, Ford and Volvo, showed minimal risk of injuries. Small SUVs are the most popular category of vehicles in the US. Small and medium-sized SUVs accounted for as much as 23.4% of vehicle sales in the United States. What remains to be seen is whether or not car makers take into account these safety protocols and establish manufacturing standards that help them make the driving experience safer for passengers. Bureau Report, Business Today TV.
Vadodara-based EV maker or electric vehicle maker Ward Wizard Innovations is all set to raise 1,300 crore rupees from the market to fund its expansion plans. Business Today TV's Chetan Bhutani caught up with the chairman and MD of the company, Yatin Gupte, to understand the expansion plans going forward and the road ahead. Listen in.
Can you give us a sense about your manufacturing facility? What is the capacity right now, and how much investment are you putting in there?
So currently the facility which we are having at Vadodara, it's the facility can produce 450,000 vehicles in single shift as of now in a year, in 2-wheelers, and in 3-wheeler the capacity which we are currently having is around 2,000 rickshaws per month, which would be ramping in next 6 months, and it would go up to 10,000 vehicles per month. So in two-wheeler, our expansion plans are very strong. We have already acquired 100 acres of land for setting up an EV cluster over here in Gujarat, Baroda. There we would be setting up a plant which can create more than 10 lakh vehicles a year. This is what we are ambitious about. Other than the plant which we are currently having, we'll be expanding to 10 lakhs now.
What all markets are you targeting for three-wheelers?
For three-wheeler currently market which we will be targeting is Gujarat, Maharashtra, MP, Rajasthan, UP. So these are the major markets which we would be currently targeting in coming 6 months.
And Mr. Gupta, how are the exports looking like? Are you in exports or planning to do exports?
Yeah, 2 months back we have started with our exports, and we started with Uganda in African market and Nepal. These two regions we have already opened.
And a significant amount of markets is Uganda and Nepal, and any other markets you're targeting?
So other than this, we have many inquiries from Canada. We are also having certain inquiries from European countries. Again, Ghana, Kenya are the countries which we have already on very mature level we have discussed with them. Bangladesh again we are targeting. So in coming 1 year we will be targeting these countries for our exports.
Well, that's it from me, Chaiti Narula, right here on the Business Today show. Keep watching India Today, and for more news and updates, do not forget to log on to indiatoday.in or go ahead and download our India Today app. Thanks for tuning in. Thanks for your time.